Check.
All
John,
right, good morning, good evening, or afternoon, wherever in the world that you are from. If we could, let's go ahead and do a sound check before we get started here. Just type a Y in the chat or the question box there. Just let me know if you can hear my voice.
John, I can.
Okay, looks like yes. All right, Roberto, Thomas. Okay, all right, fantastic. I'm going to put up a poll question, guys. All right, and you should be able to see that poll question. It says, my goal for this webinar is to gain a better understanding of micro-futures markets, learn how auto trading works, get more information on algorithmic trading, improve my trading strategy, win the free 1-year subscription to MicroFutures Advantage. So if you would, you guys can go ahead and answer that poll. And everybody who participates today will be rewarded with a very special ebook written by Luca Ficini. So I'll leave that poll open just for a moment. You guys go ahead and submit your results, and we'll be back in just a minute to get started.
Jack, John, can you hear me? John? Guess not. Guys, can you hear me? Test, can you hear me? Can you please let me know?
All right, we're all set. Yeah, Luca, we can hear you.
Oh, okay.
Hang just for a moment for us. I'm going to take down the poll here. Looks like the majority of you are looking to gain a better understanding of micro futures. All right, that's excellent, and learn how auto trading works. All right, I'll just share those results with you here.
Okay.
All right. So welcome everybody to the webinar. I want to thank Kathy at Online Trader Central for hosting this event. My name is John Madison. I'm the senior strategist here at FFR Trading. That was sponsoring this event. FFR Trading is a due diligence company. We've been evaluating trading strategies for 15 years. We put each trader and their strategy through an 8-step certification process, which includes getting the trader's brokerage statements going back at least 3 to 5 years, and running their strategy on a live account to make sure that it performs as anticipated before we ever release that strategy to our clients. So we offer strategies that you can trust. All right, we've got a great presentation for you today and also some great offers. And someone attending this webinar will be picked at random and will receive a 1-year subscription to Luca Ficini's new MicroFutures Advantage program. That is worth $2,000. So you want to stay and watch the webinar through till the end, through its entirety, to be eligible for that great prize. All right, and I'll be announcing that at the conclusion of this webinar. All right, guys, you should see there is a disclaimer up there, standard risk disclaimer, but it's important. As you all know, guys, trading and investing is risky business, right? Especially if you don't know what you're doing. All right, before I bring Luca on, let me tell you a little bit about his background. All right, for over 20 years, Luca Fascini has engaged in the financial markets as a former commodities trading advisor, futures and options broker, systems developer, proprietary trader, and market analyst. Luca is recognized by his professional peers around the world as one who challenges common trading assumptions, developing innovative ideas, systems, and trading methods. He has created and tested and analyzed hundreds of systems and methods from market profile to spread trading and complex options and futures strategies. He is a published author and speaker on the topics of stocks, futures, forex, and commodities. And he is here today to present to you his new MicroFutures Advantage trading program. All right, so would you give Luca a warm welcome? Luca?
Yep. Thank you, John. Thank you very much for the nice introduction. And I will start the webinar regarding the MicroFutures Advantage. So the CME, probably many of you know, the CME is the Chicago Mercantile Exchange, decided to offer a MicroFuture contract that is basically the scaled down version of the mini by 1/10. And by that, it means like any movement on the mini would be 1/10 on the micro. This gives us many advantages. The main one is that the margins are much lower, and that will allow us to have a bigger diversification with a small account. Before, in order to have a nice diversification with system and markets, we need to have an account that's probably around 50 to 60,000 or even more. Now with the micro, we can scale down that by 1/10. So I will show you after what we did with the micro futures advantage portfolio that can be traded between $7,000 to $10,000. That is the recommended with the current strategies that we are offering. So the micro futures advantage is really dedicated, I think, to the small account, to the small trader that doesn't have $50,000 or $100,000 to diversify his own portfolio. Remember, these are strategies that are like not correlated with the stock market, and having this kind of trading activity in your account, in your portfolio, let's say 10% or no more than 20% of your account on futures, on commodities, so uncorrelated markets, will help the equity curve of your portfolio. Normal portfolio would maybe you have like stocks and ETFs and 401k or other things. Like, it's very important to have a little part of the portfolio that is completely uncorrelated. We saw very good results last year during the crash due to COVID. In February, March, April of last year, the big contracts, because the micro, they were not available yet, performed very, very well with the increasing volatility. And during the crash of the stock market, we were able to really take advantage of the crash of the crude, of course, and the crash on the stock indexes. Then if you're only long, your stocks or options, then you will not be able to take advantage of this kind of volatility unless you are able also to go short or buying puts. But not many people use that kind of technique. Not for sure the average investor or trader. So the advantage also is that we can trade multiple markets, and that gives us a not correlated markets to trade with. So I normally create the systems, the portfolio system with different logics, different time frames, and different markets. And the multiple markets are getting more and more available. So it started with gold. Gold was the first micro a few years ago. It has a very good liquidity. Silver, not that much, but is available. Now the S&P, the micro S&P, the micro Nasdaq, the micro Dow, and the micro Russell are very, very liquid, very good. And so that are part of the portfolio. We also have a couple of currencies. The euro is pretty liquid, the yen not that much. But just recently, I think last week or 10 days or 2 weeks ago, they started the micro crude light, and that I think is going to be a very successful instrument for us to trade. Will give us many opportunity to create diversification with another commodity, not only with gold. And also we have now the micro Bitcoin that currently is only about 5,000 to 7,000 contracts a day, so it's not very liquid, but eventually it could become a very interesting market for us to trade and take advantage of. Crude light right now, the micro is about yesterday was like 25,000 contracts, so it's liquid, but not for sure comparable to the big contract. Again, these are like 1/10 of the value of the current big contract. Now, so like I was saying, the main advantage that the MicroFutures portfolio will give you is the opportunity to diversify the traditional portfolio with an alternative investment, something that unless you have a lot of money is not easy to do. You can diversify now a small portfolio with no more than $10,000. The current micro portfolio is composed by 5 different markets and 6 systems working right now. So we have the systems, day trading systems on the micro S&P, micro Nasdaq, micro gold, micro Dow, and micro Russell 2000, plus one swing system on the Nasdaq. And like I said before, the micro crude will be added soon with a couple of strategies we're already using on the big portfolio, and they're performing well. We have a swing and a day trading system that they're going probably to be transported on the micro futures. Again, I always prepare build the systems and the portfolio using a very professional protocol with a lot of testing and statistical analysis, and we'll try to do the most robust systems available on the market. Again, it's not guarantee of future result, but I think we are doing well, so we're probably doing something right. And now, last webinar, we were talking about auto execution, auto trading. A lot of people did not understand that part. And so these are not systems that you can just take the signals and place it on your own account. You have to open an account with a broker, and this is like kind of the confusion that came last time. So what is an auto execution? So the auto execution is basically these systems are going to run on servers of a regulated broker, a regulated broker in the United States, based here, and is regulated by the NFA and CFTC. And this will guarantee us the best execution possible for the logic of the system. So what is auto trading? So basically, auto trading and auto execution is the same thing. It is a way to trade a system, or in this case, a portfolio strategies automatically without the need to place manually any order in the trading platform. So the trader and investor opens an account with a regulated broker that offers these features, of course, and the trader doesn't have to worry about missing a trade generated by the strategy. The reason why is because this program run automatically 24 hours a day on a dedicated server, and they're transmitting orders even out of the normal time, right? So maybe overnight or before pre-open or after the market closes. So it would be impossible for somebody to constantly be there and try to place orders, especially on multiple markets. So in this way, we know for sure that any buy or sell generated by the algorithm is going to be executed perfectly well, hopefully, with very small slippage. And again, the client doesn't have to do, in your case, you don't have to do any monitoring or actually redo anything except to check the account the day after when you receive the statement to see which kind of buy or sell activity we had on the previous day. Again, everything is done automatically on the broker side to make sure that, because last time there was kind of confusion. So everything, the target, the stop loss, especially the entry and exit, are all executed without anybody inputting the trades. Everything is done by computers. So the server is going to do that, is running the code of the systems. And again, we are monitoring this hourly, daily, everything, make sure that everything is working and operating as expected.
Luca,
Yep.
Great time for a poll question. I'm going to
Okay,
launch a
cool.
poll here.
Sure. Go ahead.
All right, you guys. So let us know about your current trading activity. Does it include futures trading? Are you focused on stocks and options? Do you include Forex or cryptos? All right, so answer that poll. And I'll leave that open just for a moment. Go ahead and submit your answers. All right, looks like so far you do include futures trading. All right. Last chance to get your answers in. Okay, poll is closed, and I'll share the results with you guys. So 65% of you you're already trading the futures market. All right, and then 39% you do trade stocks and options primarily. Looks like some of you are about 30% involved in the Forex and crypto markets, and 13% mutual funds. And let's see, 13% of you, that's a pretty high number actually. That's in cash and savings.
Okay.
All right, back to you, Luca.
All right. Thank you. Thank you, John. So some of you maybe don't know what is a quantitative strategy or algorithmic strategies. A quantitative strategy is basically designed to take advantage of modern technology. So using powerful computers and software. There is a lot of mathematical and statistical analysis behind every system. And the end result is a computer program that will generate all the trading activity that normally a trader does. But in this case, there is no human intervention. So once the code is generated and we have the rules, everything is going to be transmitted from the server to the exchange via the broker automatically without anybody really inputting any buy or sell into the system. The advantage of quantitative trading is that we can use these on different trading styles. So we can have like a day trading, swing trading. We can go counter trend or trend following, or kind of a short time using like few minutes to few hours. So we can create quantitative trading on different time frames and different markets at the same time. And again, this is not very possible to do for the discretionary trader. They're usually specialized in one or two markets at the most for a few hours a day. We normally, when we create the quantitative strategies, do a lot of back testing, and the back testing is very important because it gives us an advantage, even if it's just theoretical, that we can run some statistical reports and see what happened in the past and try to predict the way that will work in the future. A discretionary trader, and I don't know how many of you are discretionary trader or not, usually work with a very limited sample of trades for the system or method that you're using, and to backtest manually, let's say intraday, is very difficult. And that's the reason why we're using software to do this kind of studies and research. And the emotional trading is the most dangerous of all the danger things about trading, for sure. And for the discretionary trader is the enemy number one. I mean, if you did and you're doing trading discretionary, you know that it's enough a bad day or a bad week or not respecting a stop to turn a positive month, a positive week in a disaster. So we are trying to remove the emotional factor for trading with the quantitative strategies and let the system and the computer take the entrance exit with a stop loss or a target in a cold mechanical way without being involved emotionally. Again, there is always emotion even for systematic traders, but is like 90% less than discretionary traders. So I think the advantage of the quantitative strategies and in this case the portfolio is that you can still do your own discretionary trading if you are successful, or you're not successful, you're just learning to trade, whatever. But I think it's good to diversify your trading with maybe some systems that are they're performing well, and they're built with a professional approach, and that will give you results that maybe you cannot obtain on your discretionary, or you can add your successful discretionary trading with a quantitative strategies that is been performing well. So let's move on to the next one, the next slide, and just a quick recap. The way that I build the strategies, just to give you an idea of why we do this and why we are able to obtain good results compared to a discretionary trader, because there is a lot of work involved in what I do. So we usually test a set of rules or observations or other factors that I'm using for a set of data that we call in sample, and that could be something that is, let's say, 2 years, 5 years ago. So I'm checking what happened with this set of rules 5 years ago for 2 years. And then if those rules are acceptable, I will run the same systems on a second set of data that has been unknown by the system. It's called out of sample, in order to see if the results are still in line with the performance of the first sample of data. If that is the case and everything looks pretty much in line, then I will stress test the system by using Monte Carlo simulations or walk forward analysis or other statistical stress testing techniques, and basically by switching like entry points and whatever indicators, now the value of the parameters, because the markets are always changing, and so we cannot assume they're not static beasts. They're always changing somehow. So the system has to be robust enough to allow the market to have these little changes, but without breaking the logic and breaking the performance of the system. So, by switching, I don't know, the start of the trading and some parameters and back and forth, and if the system is still performing well, then we have even more confidence that this is going to be a winning system, a robust system. So when all of this is done, and many times I also do an extra out of sample, so I keep a set of data to basically test one more time on unknown data. If everything looks good, then I'll do the same things for the portfolio. So I put the system together, and now I'm going to stress test all the system working together and see which kind of correlation we have, and again with the Monte Carlo simulation, see if everything is still performing well. And sometimes we have to remove some systems or optimize some systems based on the results of the testing. But if everything goes okay, then the system or the systems are going to put in an incubation phase, where normally I follow the strategies in real time from a few weeks to a few months. It depends, but that normally is just a few weeks to make sure that everything is up and running well on the servers in live trading with live data and everything. When everything is okay, then we are going live, and we move forward with the systems. Now, I'd like to show you some results obtained with the system, with the portfolio, the MicroFutures advantage. You can see that the system was able to have about $44,000 in profit in a period of 5 years. I don't know if you can see that. Hold on a second. Maybe not. Hold on a second here. Okay. Can you see my mouse now? Yes, probably. Yeah, okay. So $44,000. Yeah, okay. Yeah, I think my mouse went crazy for 1 second. Let me see if I can change in different. Here you go. All right, so about $44,000. This data goes back to the first quarter of 2021. So I did not update yet. I had to do the calculation for the second quarter. This goes to the end of March of 2021 with about $45,000 in profits. The important things to notice is that there are over 2,100 trades. So from a statistical point of view, it's very important to have as many trades as we can. And you see the statistics here that show, again, the beginning is 2016 to March 2021. There were like over 1,000 trading days. And the max drawdown that we saw is about $1,800. You can run it up to 2,000 if you want, because intraday we reach about 2,000. And this is also with the consideration of commission and slippages, that is again scaled down to 1 to 10 from the big one. And the initial capital that I use for this calculation is $7,000. Again, this goes to 1/10 of the biggest portfolio that we're using on the bigger accounts. Return on capital has been very, very good, and average per year about 122%. Again, we don't know if we can perform again like this in the future, but so far we see the same results and for the last few months. So I'm very confident that we can do very well again in the future. I want to show you also now the let me clear all this stuff here. I should erase all this stuff here. Okay, so you can see that this is a snapshot of my TradeStation Manager window from, I think is from 7/21. There was last Wednesday, about a week ago. I want to show you that there's exactly 1/10. So this is like RTY, right? You know, there's a mini Russell big contract. We had $1,175 profit. Now the micro Russell, you can see that it is exactly 1/10 at $117.50. Same things here with the micro Dow. You see that is like $6 loss, and we had like a little different slippage. It's actually positive slippage for the micro. The YM was losing about $65. So the fields that we are seeing are very, very good. The liquidity is great, so the slippage is minimum, and it's exactly 1/10. So whatever we did in the past with other systems, for example, in the crude light, I'm confident that we'll be able to achieve the same results by basically using 1/10 of whatever we did in the past, because the liquidity is very, very good. So let's move forward, and I want to show you an example of a few trades that we did in the past. Let's see if we can get this going. Okay, I think I went too fast. No, okay, here we go. Okay, this is the old slide. Okay, so this is a slide of a micro Russell trade that we did about a month ago, and you see that the results are like $145.50 profit. Now, if I go on the next slide, you will see that the same trade, identical, the chart that looks exactly the same, on the big Russell is $1,445. So it's exactly scaled down 1 to 10. The next example I'm going to show you is an example on the mini S&P. This trade was done on 7/20, so last Tuesday, and it was, let's see if I can enlarge a little bit this one here. The entry was here and the exit was here, and this was worth $301.25. I don't have the slide for the big one, but it was an excellent trade for $3,125. So it was 10 times as big on the big S&P. Actually, it's the mini S&P, and for the micro, the portfolio, this was we were able to obtain, and the fields were exactly the same, the results exactly the same. So it's very very good liquidity, and slippage is not an issue at all. If you don't know what is a slippage, is basically the difference between whatever you're expecting to obtain on a fill, and if there is a big difference between the bid and ask, then you will have slippage. If the market is very liquid, then you can rest assured that pretty much you will have a good fill, and the slippage is not an issue. This is important because when we are creating the systems, slippage is always an issue. But in my experience, my professional experience, I noticed that they compensate each other. Sometimes you will have slippage that is negative, like we had a couple of days ago on the Nasdaq. So we did not have a good slippage for whatever reason, was an execution point problem. But then happens that the following week you will have a positive slippage. So in the long run, it's out of 100 trades, you will have no issue with the slippage. It always is a minimum. So especially on liquid markets. Now, so this is an example on the micro S&P. This is an example of trades on the gold. That's the reason why I use the gold around the chart. And let's see, this trade here was a scratch. Pretty much we went long and we got stopped out at the same level. This system went long on the 6th of August, and it got stopped out here for about $300 loss. Again, the system also loses, you know, it's normal, it's part of trading. And then on 7/14, we went long and exit by the end of the day. This is the gold day system, and we had about $300 profit. So these three trades basically were like a scratch. We maybe lost a little bit with commissions. But that's kind of the activity that we see on gold. The gold is very, very choppy lately. It's not the best market compared to last year. Let me give you another example. First of all, I want to erase all the drawing. And so these are trades on the micro NQ swing system. They go overnight. Okay, the trend of course is up. So the system is really pushing for long trades. So you can see these are all long trades, and some did very well and some that were stopped out. Right now with the current market, we have a $2,800 for the big contract, the $280 for the micro target, and about $200 for the stopped out. So this was a good trade. Then we went long twice and we got stopped twice. And then we had 1, 2, 3, 4 good trades for $2,800. And then again, we got stopped out here, and we got stopped out today, by the way. So the important thing is that we have more winners than losers, and that when we win more than you lose. So that's a way to make money at the end of the month or the end of the year. So that's the advantage of mechanical systems, because again, we cannot take these trades. You know, it will be impossible. You have to be awake 24 hours a day. Even if I send you the signals via email or text message, you know, you have to be in front of the computer, and you don't have a life. So that's the reason why we're using a server, and everything is monitored pretty much 24 hours, and we don't have to worry about anything. Let me show you now the, let me erase the drawing. Okay, so these are the periodical returns done by the portfolio starting in 2016 up to March first quarter. We'll probably update the next week or so, or probably in the next week, the second quarter. You see that the market suffered a little bit. The portfolio suffered when before the election, market basically they were frozen, and we had a lot of choppy, and now we went down by 16% on portfolio. But then previously to that, because there was a lot of volatility, we did very, very well, and the performance of the portfolio was excellent. Every year is different. You know, you have 2 years where you have 45%, 68% return, and then you have 2 years where it's over 100, and now, you know, up to March was about 50% return on the portfolio. Again, you have to be careful, because again, these trading futures, and it has to be a risk capital, but it is a good way to diversify maybe your own trading activity or your portfolio with something that is uncorrelated with Wall Street. So you can see here when in February, March, the market crashed, that we did very, very well. Okay, let's move to the next one. And is the the equity curve of the portfolio, and see, it's very smooth equity curve. We have like, this is the period before election last year, very flat. We had a little drawdown here. Drawdown happens all the time. It's normal part of the systems, but the system are performing well, and the equity curve, I think, looks very good. So John, I don't know if you wanna, do you have any poll or anything you wanna say before I move to the next slide?
Sure, Luca, this is a great time. Guys, what do you think of those results, especially when you take into consideration, you're talking about an 1800 maximum drawdown, right? Looks good, right, Chris? All right, let me insert a poll here. And this one has to do with your biggest trading challenge. So select one of those answers here. I'll give you guys a few moments. Is it dialing in your strategy, controlling your mental game, finding the right entry and exit points, your risk management issues, which is a big one I know for a lot of folks, the asset allocation or portfolio management? All right, so the answers are coming in here. And it looks like so far pretty close between risk management and controlling the mental aspects of trading. All right, so I'll just give it a moment more here. Guys, get your answers in. All right, I'm going to go ahead and close the poll. And let me share the results with you here. So you can see, it looks like the biggest was the risk management, which is typical, right? As we say, if you can learn how to manage risk, you can do this. If you can't, forget about it. Your mental game, another big one, 33%. And then you're finding the right entry and exit points, 24. And then dialing in the strategy, right? Just 5%.
Yeah, if I can
Right.
say something about this, the result of this quick poll, you see that there is really a correlation between controlling the mental game and risk management. The reason why is because many discretionary traders do not use hard stops, or if they're using a hard stop, I mean, by that I mean like you actually input in the machine or in the DOM or the chart, whatever you're using, the stop loss. It's very easy to remove that stop loss or to modify the stop loss. One of the advantages of the quantitative strategies is that we cannot do that. I mean, it's like the stop is there, and when it's time to get hit, you just exit and you get stopped out, and you look for the next trade. When we're trading discretionary, there is always that little devil inside your head that will think, oh no, this trade, if I just move the stop a little bit, then I'll be fine. Or when it's time to take the profit, the quantitative strategy, if it is $2,800 target, you have to wait and don't think about anything else until when you reach the target. But if we are doing this in a discretionary way, then we can always say, you know what, today, for whatever reason, I'm not going to wait $2,800 or $280. I'm going to exit with half of that because yesterday I lost, so I want to have some money on my trading account. And that's totally fine if you are able to manage positive results at the end of the month. The problem is that in the long run, by sabotaging your own system and method, you're going to lose. It's just like mathematical. So, so those two are very, very much correlated, and that's the reason why a lot of people are, losing in trading, especially in day trading. That's for sure the most difficult things you can do, and so yeah, so that's all I want to say.
All right, excellent extra information there, Luca. I'm going to hide that poll, go back to your slides, and back to you.
Okay, perfect. So yeah, so the poll is very interesting, I think, because it will show you really why traders are losing, the confirmation of things I've seen in many years as a broker, as a professional trader, and as a consultant, as a teacher. I saw this too many times. So discretionary trading is very, very difficult unless you have a semi-automatic system or possibly a mechanical system that you believe that you know that is working for you. Then you can do it. but it's very difficult to create and to maintain discipline with doing day trading. Anyway, so let's go to the next slide. That is basically the recap of why I believe the MicroFutures portfolio is a very good program and product. First of all, I think because it is affordable to a lot of people, and the number one point is that the money management and risk control is exactly what it says on the poll is covered, like, because we cover in a systematic way all the different possible scenarios. So we have the stop loss that is hard coded, the risk control is automatic, and you don't have to worry about not taking the loss. And usually, like I said before, a small loss that is not taken, it becomes a huge one. So there is no emotional trading involved, and this is number two. And this is exactly like the poll of the participants said. The systems are trading always looking for new opportunities 24 hours a day, and you don't have to be there personally, physically staring at the screen, even when maybe you don't feel well, you didn't sleep well. So there is no emotional trading. The system will just take the trade because it's like coded in the computer, and when it's time to take a stop loss, you take a stop loss. When it's time to take a profit, you take a profit. Now, if you can achieve that as a discretionary trader, is great, but it's also nice to have somebody else who can do it for you. Another advantage of the MicroFutures portfolio is that there is no over trading. So these are not systems that they're being created to do some kind of scalping or high frequency trading. I have other stuff that do stuff like that, but that is not what we do here. And so the S&P, micro S&P trading that you saw before, this system trades maybe three to four times, maybe 5 times a month. So one trade a week or maybe two. So there is no over trading, and that is very good. Now, if there is a lot of volatility, of course, the systems have filters that will trade more often, and so they try to take advantage of the increased volatility. But usually, if the volatility start to decrease, then also the trading activity it will decrease. That's exactly the opposite of what discretionary trade you do, because when the market starts to go sideways, when you start to lose money and you want to make up for the loss, and you trade more when you are not supposed to trade. And when the market moves fast up or down is when you should trade more, and you don't, because maybe you get stopped out, you get scared, or whatever. So on top of that, I will have in the future a system of tools that I will present another time for people that will do more discretionary traders, but that's for another time. So another advantage is that we can do portfolio diversification with different markets at the same time. So we can have gold, soon we'll have crude light, so a couple of commodities. We have basically all the indexes. Even the indexes, they don't go together all the time. Just yesterday we were doing well on the Russell short, and we're making money on the Dow long. So it doesn't have to be, just because they're indexes doesn't mean that they always go down and up all together. There is diversification inside the different indexes. And then eventually we'll have euro. If the euro start to move a little bit, the currencies right now, they're not moving a lot, but we can have also currencies inside there. But the portfolio diversification cannot be done by a human, by a trader, because if you day trade for a while, you know that you cannot pay attention more than a few hours, and on a couple of markets, maybe. Usually it's 1 or 2 markets. So how can you trade 6 different markets with 6 different strategies? This is impossible. So that can be done only by a computer, by a machine. And so that is the advantage. The systems, again, are developed, I think, with whatever I believe are the best professional approach, and how to create the system and test them, and have top computers and advanced software for the oral analysis, and so I think a good protocol for the strategies creation. And again, there is no holy grail in trading. Nothing is holy grail. Nobody has a holy grail. but it's for sure better to have 6 years of backtested trades and statistical data than maybe just 6 months of discretionary trading analysis. Okay, so that's very important to understand. I think 80%, the majority of the hedge funds or CTA, they're all when they manage their money, they're all through quantitative strategy and algorithms. There's no discretionary stuff going on. And again, the systems, the last point, are constantly monitored by me and by other people that work with me. And we make sure that everything is running smoothly. And if there is any kind of problem with one of the system, let's say that the performance are not there, then the system can be put on a standby because maybe the market is sideways, is not has any volatility. So the system is not broken, but the market is broken, right? So we put the system on standby until when volatility comes back. Or maybe there is a lot of volatility. The market is doing great, but the system is not doing well. So the system can be reoptimized, or maybe can be just discarded and substituted with a new one. So there is a lot of work of maintenance behind the portfolio. It's not just like a black box where, you know, I bought that in the past and a long time ago, and you buy a few systems, and then after 6 months to 1 year, they don't work anymore, or even 3 months, because the market changes, but the rules of the system, they don't. And so I try to do different things with these systems and try to have a more proactive approach and try to keep them alive as long as possible. And so that's what we do. You know, every system is different. Every market is different. So there's a lot of work behind this micro futures portfolio. Okay, so I think I'm done for my presentation, and I'll pass the word to John. Thank you very much for attending. I hope you learned something about micro futures and the advantage of trading them in the portfolio. And that's for you, John. Thank you very much, and everybody have a nice trading day, trading week, trading month, trading year. Bye-bye. Thank you.
All right, excellent. Thank you, Luca. And guys, we do have a great offer for you today. The cost of the 1 year of MicroFutures Advantage program is normally $2,000. However, we have a fast action bonus today for the first 10 callers. We're going to get a second year of the MicroFutures Advantage system absolutely free. Right. So when the webinar is ended, you're going to call this number, the 800-883-0524. Right. Write that number down, because once it's gone, you won't have the number to call. It's 800-883-0524. Right. You're going to call me. You're either going to talk to me directly or to our admin, and she's going to log and make sure everybody that is of that first 10 is going to get that second year free. All right, so imagine, guys, being able to brag finally to your friends and family about your trading. All right, I know this, guys, if you don't take any action, all right, nothing in your financial world changes. All right, so I'm just asking you to take that step. All right, guys, if you have questions, go ahead and start posting them now. And so remember, the first 10 callers will be getting 2 years of Luca's Micro Futures Advantage for the price of just 1 year. All right, so let's take some questions. And once we're done with the questions, we'll get to the winner of our 1 year subscription to Luca's Micro Futures Advantage for free. All right, Michael wants to know, Luca, what type of indicators do you use?
Good question. So I'm a believer that the less complex the system is, the better it is. So I usually use the more traditional indicators. I mean, the software that I'm using and the way that I create the systems are based on observation. So there is a lot of also pattern recognition. But overall, I'm simply using normally as a basic, as a foundation, stochastic, MACD, exponential moving averages, and RSI sometimes. But pretty much those are the main one I'm using. I use a lot of statistics based on average true range for the stop loss and the calculation volatility. But that pretty much that's it. I mean, yeah, it's simple stuff, not too complicated.
All right, great. Another question from Bodie. He's got a couple here. Can you manage the trade in real time? Exit, get in, better pass on the trade, etc. And the second part of that is there more than one system?
Okay, I'm not so sure I understand the question. So
the first part of that, can you manage the trade in real time? How about tackle that one first?
oh, okay. So no. So when you open the account with the broker, imagine this as almost like a hedge fund, or I don't know if you ever invested with a commodity trading advisor. So basically, you open the account with a broker. You sign the paper, and then your account is used just for trading. Is managed by the CTA or the hedge fund, in this case by the systems, and that account can only be traded by the system. So there is a letter of direction from the broker that basically say this account number blah 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 can only be traded by this set of rules coming from these systems. And so you don't have any saying on when to exit and when to enter, or modify the entry or the exit, because you don't have access to that trading activity. I don't know, probably I don't know, maybe you are familiar with I don't know, Collective 2, or other in the past there was Strategy Runner. There are other platforms out there that will allow you to follow a trading system, and then you can modify that stop, start, entry, exit, and modify the logic. But if you do that, you're going to go against what we've been talking until now. So basically, you're going to do a discretionary entry exit on a system that has been created and tested exactly in order not to do that. And so no, you cannot do that. And when the system goes, it goes. You can say something like, if I reach, I don't know, 20% of drawdown on my account, hopefully it never happens, or 30%, whatever is your mental stop, then you can say, hey, I called the broker and I want to put my system in standby, figure out what's going on. But you cannot just say, okay, today I want to trade, and tomorrow I want to trade, or next month, yes, or today I want to exit early. You cannot do that.
All right, great. Thank you, Luca. And Craig wants to know, what is the recommended account size?
Yeah, so on the calculation for the performance of the portfolio, I use 7,000. Maybe it's a little aggressive. You can probably use eight to $10,000. I say 8,000 would be fine for these systems, because many of them are like day trading systems. So the main problem is to have a correlation between the max drawdown that we saw is about $2,000, and so is you that need to understand what is for you. So if you open with $10,000, and we know that statistically, historically, we had the $2,000 drawdown, we know that you need to be able to withstand psychologically a 20% drawdown in your account, and you don't care about that. Now, I always say that drawdowns are made to be broken in the future, because we don't know, so you want to give a little extra, maybe another 5 or 10%. So if you're okay to say, I'm okay, I'm not going to the panic if I lose on my account, if I see a loss, open loss of $3,000, that would be, I don't know, 30% on 10,000, then it's okay. You can open with 10,000 and work from there. Other people are more aggressive, say, 7,000 is fine for me. And the people say, I want to be very conservative, I want to open with 15,000 or 20,000, and so the drawdown is going to be only maybe 10 or 15%. That is a personal choice, depends on your on your wealth, on your attitude toward trading. And so I cannot really answer that, but the calculation has been made to use at least minimum 7,000. 7 to 10,000 is what I recommend minimum.
And Luca, just to follow up, some are asking the question on that 7 to 10,000. If they start with, are they trading one lot, or how is that, and who decides that?
Yeah, exactly. So those are like one lot per signal. And going back, I think, to the previous question, there was two-part questions. I think that what it's saying is like how many systems are working, or maybe meant if there are multiple systems working on one market. And the answer is yes. For example, on the NQ swing, we have two systems working at the same time. On gold, we have two different systems working at the same time. Okay, so some markets have multiple systems, and it's not just one market per system. Sometimes some of these markets have multiple systems working at the same time with different logics. And I don't know, what was the question? I can't remember now.
Yeah. So can you once again just tell them what markets you're currently trading? What micros are you currently trading?
Yeah. So there is the micro S&P, and that is only one trade system. And then there is a micro Nasdaq that is composed of two systems. And there is a micro Nasdaq swing composed of two systems. And there is the micro gold composed of two systems, micro Russell, one system, and micro Russell 2000, one system. Those are what is currently going on the portfolio. Again, the portfolio is very dynamic. That means that if the systems or the markets are not performing well, there will be other systems or other markets that are going to be used. It's like a team. You're not performing well, you're out, and you are doing well, you stay, something like that.
Okay, and then Ryan was asking, how are the number of contracts traded? You kind of touched on this, but just to make it clear, is it by the user or by the account size and so on?
The number of contracts?
Correct.
Yeah. Well, that's something that you need to be discussed with the broker. I mean, it depends on how big is the account. I don't know. I mean, it's like this is the minimum. So if I say $8,000, the minimum example for the portfolio currently, then is one contract per system. Okay, so if you have multiple lots, then you need to have double the capital requirement. I don't know how much you're going to open an account with, so I don't know this information. I don't have it.
Okay, and Michael's asking, where can I find this information? Michael, and I think somebody else had a question about return on maximum drawdown and so on. Guys, if you want, just call that number, that 800-883-0524 number, ask for me, John, and I will get with you and I'll do a screen share and I'll go over the numbers with you, okay? So if you have questions about that or you want to see these numbers in more detail, just give me a call and we'll go through that at a time that's convenient for you, okay? All right, any other, let me just go through and make sure I didn't miss any other questions here.
Yeah.
I think you answered that there is more than one system. There's a total of what, is it 6 systems, 5-day and one swing trading system?
Yeah, correct.
Okay. Okay, guys. All right. Looks like we got the questions. So let's go ahead and announce the winner of the 1 year of Luca Ficini's MicroFutures Advantage program. All right. And let me find the winner. Here is Chuck Keller. Chuck Keller, are you there? Chuck, just type in the question box or the text chat there. Let me know what you can do. All right, there's Chuck. All right, Chuck. So Chuck, just after we're done with the webinar, if you want to call the 800-883-0524 number, all right, have admin let them know that you are the winner of 1 year of Luca Ficini's MicroFutures Advantage program. So congratulations to Chuck, and way to stick it out through the end. All right, guys. Thanks again, everyone. Thanks again for Kathy at Online Trading Central for being our host today, and our sponsor, FFR Trading. That's me. And thanks again to Luca Ficini for a great presentation. Guys, don't forget, give us a call. be one of the first 10, and we can get you in for that second year free. All right, again, that number is 800-883-0524. Everybody have a great evening.
All right, guys, thank you very much. Bye-bye.